conflict in Iraq and tensions in Russia and Ukraine, global oil prices would be rising. You would think that. That's what we'd expect. But in fact, yesterday saw a key oil price fall to its lowest level in 2 years. Let's have a look at what's been happening to prices over the past few months. Well, back in June, Brent crude, that's one of the most common measures of the price of oil, went above $115 a barrel. But by yesterday, that had slumped to settle near $98 after hitting 2-year lows earlier on in the day. But has that fed through to prices at the pumps? Back in June, you might remember, unleaded was just over 130p a litre and diesel a touch under 136p. But the latest data shows prices have only dropped a little to 129p for unleaded and just over 133p a litre for diesel. So not quite as big a falls as we've seen in the raw material oil. So what's going on? Joining me now is James Igoe of Hume Capital. James, welcome. Morning. Why this fall in the price of oil recently, in recent weeks?
Classic oversupply. We've had an issue with, I guess, one of the main clients for oil in the last 6 months. Particularly is China construction, and some of the economic indicators coming out of China have fallen a little short of what was previously expected. So construction activity, for example, is a lot lower than was anticipated. As a consequence of that, they're taking in less oil. There's oversupply and the price has fallen just by supply demand.
But what's happened in previous times like that is that the oil producers, who are often cartels, OPEC is a cartel, they just decide to lower production themselves. But that hasn't happened so much. They're worried perhaps of oil prices rising again in the West, like we saw in recent years.
Yeah, you're absolutely right. So OPEC split, which is a reasonably rare phenomenon actually. So Saudi have decided to cut a little bit, although some might say that's late, whereas a couple of the other members, particularly Libya, have actually increased. So they're undecided across OPEC. Predominantly because of that situation.
Yeah, because what happened, remember back in 2008, we saw oil reaching almost $150 a barrel. Petrol got really, really expensive. Energy got really expensive, didn't they? And we started doing different things. We started using less of it. They don't want that to happen, do they?
Correct, yeah. Necessity is the mother of all invention. And what happened post-2008 was the search for alternative fuels that could get away from the dependency on oil. And we're seeing now the materialisation of that effect in the last 5 or 6 years. More efficient cars, electric cars, different forms of energy. And they would rather not, being a one-trick pony to a certain extent, allow themselves to be susceptible to that. Impact in terms of what's going on in Asia. Right. So even with the events of Russia and Ukraine in the past couple of months, you won't actually have seen a massive impact in oil. In fact, it's been a bit of a non-event.
Okay, interesting. Thank you very much, James Igoe of Hume Capital. Thank you very much for joining us.